If you are still in that government role, would you advise on the lifting of these tariffs in order to help with those price pressures that we're seeing in this country?
I'd advise on lifting the tariffs, but not necessarily because they're going to have a big impact on inflation. The tariffs, I think, were put on at a period of time to punish China for a variety of its economic policies. None of that seemed to work. None of that has really done much to alter the trade deficit either. So I would repeal the tariffs on those grounds alone. It will have a marginal impact on inflation, and for that, if that's an additional reason for the president, that's great too. But it's a step in the right direction. But as I say, not necessarily going to solve the inflation problems, which are really fundamentally about interruptions in supply of energy, food, and a whole lot of other inputs to the economy that you've covered.
Chris, you've been cautious about the economic outlook for a while, and yet in your latest notes, you say that the U.S. consumer still looks strong. So what are you expecting in terms of consumer spending, demand, and how that's going to impact, for example, the equity markets and the consumer discretionary side of things?
It's a weird slowdown we're in right now, I think, because obviously the headwinds are pretty stiff with rising prices, rising interest rates, and signals from monetary authorities, the Fed in particular, that they are very focused on bringing prices under control. Having said that, the U.S. economy is about as strong as you could imagine to withstand those pressures. Household incomes are still high and rising. It's a tight job market still. Companies have reported good earnings, and the banking sector is rock solid. So I think you're going to see a slowdown. The risks of a recession are rising, but it's still not our base case that we're going to get a recession in the U.S. this year or next.
How much concern is it when it comes to the psychological aspect of the inflationary mindset perhaps already being entrenched?
That, of course, is the big question, and that, I think, is what spooked the Fed a couple of weeks ago. Some of the surveys showed that long-term inflation expectations, 5 years and beyond, were starting to tick higher, and I think that's where they felt they had to respond very vigorously and signal that they were going to take on the next few meetings with some significant hikes. The psychology of what gets built into both consumer expectations and then wage expectations is a very hard dynamic to break. And so that, I think, is why they're determined to head it off before it takes root.
The great hope was really China, and for a while there we saw the nice bounce when it comes to Chinese equities. It looked like perhaps the property risks were contained as well. But with that doubling down of COVID zero, is there a cap on how much of a recovery we can see?
I think we've all been caught off guard for being a little too complacent on COVID again and again, and there's always some kind of a relapse that we're usually better able to handle and doesn't require us to impose very strict measures. I think it's very encouraging to see the trajectory China has taken in the last several weeks, but the new reports give cause for worry that it's not going to be a straight line back to normal, in spite of what the government is doing to show at least a little bit of flexibility and some targeted support for the property sector, some areas of the banking sector, and others.
We've got our MLive question, which tries to get to the bottom of what we see with crypto. And of course, there's two camps. There's always been two camps with Bitcoin and crypto, right? To the moon, and those that think that it's worthless. There's a lot of space in between. So I'm wondering where you think the dust kind of falls post-pandemic with one of these pandemic darling asset classes like crypto.
I am firmly planted in between. I think that cryptocurrencies, distributed ledgers are going to be a very important part of the financial system in the years ahead. But we're going to go through several periods of shakeouts, which is normal for any new technology. I have, lots of questions around the business model around Bitcoin, even though that it is the largest and most popular cryptocurrency out there. But it has also shown that it is very much a risk asset rather than a store of value. And it is, in some sense, a bet on a business model that has very much yet to be proven. Having said that, the work that central banks are doing, the Fed, the ECB, and others, to bring some sort of digital central bank currency into the financial system, I think is to be welcomed. And you're going to see a lot of other stablecoin alternatives that will appear. Some will have value, prove their worth. Others will evaporate into thin air, as so often happens with leading technologies. So that's where I stand on the Bitcoin question.
Chris, of course, we were hearing about what's happening in the UK government, and overall, a lot of people that we speak to these days seem pretty negative when it comes to the outlook for the economy in Europe. We are actually seeing dollar parity inside for the euro as well. What are your thoughts about how this will affect what the ECB does next and the markets because of it?
Well, I think the great tragedy is this was going to be the year where Europe emerged from the pandemic with both supportive fiscal policy, relatively supportive monetary policy, and strong growth drivers, particularly on the consumer side. And the hit from the war in Ukraine, not just as a political or a humanitarian tragedy, is that there will be these inflationary shocks from primarily energy, but also food and other disruptions to the supply chain that will force the ECB to tighten, which it has already signaled it will do. And a very sharp, we think, decline in growth momentum, probably leading to a recession later this year or early next.
How much of this story is really the flood back to the US dollar, despite, of course, the domestic recession concerns? Is this kind of re-entering a period where we see king dollar again just because of the risk-off sentiment?
It's hard to see the dollar weakening substantially from here. As I mentioned, the weakness in the European economy puts the European Central Bank in a box. They probably can't tighten as much as they would like to. Interest rates will still be significantly lower than what they are in the U.S. right now. And so I think that has given additional momentum to the dollar, along with what you described in some of your earlier reports about this flight to quality, flight to safety that has always been something that the dollar has enjoyed. I'll just mention that the problems that the ECB faces were drawn in particularly sharp focus this week when we got late last week. The CPI numbers for the Eurozone as a whole were 8.6%. That was an average which ranged up to and including Spain, which came in at 10.6%. So when you have that kind of inflationary pressure coming through, you're probably going to see a pretty significant decline in consumer demand, and therefore the weakness and recession risks rising in Europe.